Hi everyone, my name is Edwin Samuel, a hedge fund portfolio manager. So last week we were looking at the structure of a emerging hedge fund, or how to structure your hedge fund. So this is more like a part two because last week video was too long, so I had to cut it and set a different date just to do the completion of the topic we started last week. So if you're just coming across this video, I advise that you get started with that so you understand the groundwork and how we got started and how we landed at this point so you can understand everything. Before I go ahead, please, if you're just joining us for the first time, you're just listening to me for the first time, my name is Hedwin Samuel, like I said, a hedge fund portfolio manager. I wanted to say my name is hedge fund. So my name is Edwin Samuel, a hedge fund portfolio manager, right? I manage investment portfolio for investors, venture capitals, family offices, and all of that stuff. I also help you, get started in, launching your Forex hedge fund, and of course, getting started to manage investment portfolio for investors as well. If you want me to get inspired to be, giving videos like this, making videos like this, and of course, giving you value, giving out value, I would advise that you subscribe to this channel, right? Hit the like button, right? And turn on your notification bell so that anytime I drop a video like this, you get notified quickly. So last week, I'll just do a brief touch on what we talked about last week. We're talking of how to structure your hedge fund, where I talked about the startup phase and the growth phase. Under the startup phase, I mentioned that there are two structures of which you can get started without a license, which is the percentage allocation management model, the PAM, and the multi account manager, which is a MAM. That is for the startup phase. And when you progress to the growth phase, where you want to take your assets under management to $100 million, $500 million, you need to structure your fund well. You need to make it an independent fund, and that's when you can start considering the Mauritius Global Business License and the industry standard GP and LP model, right? I'll make it an exclusive video on the GP and LP structure. So in today's video, we'll just be looking at this model, the multi-account manager, because we've already talked on the percentage allocation model. And if time permits, we'll now look into the Mauritius Global Business License. So the multi-account manager is similar to the percentage allocation management model, right? On the percentage allocation model, remember I said that look at this, what we used. Remember I said that on the percentage allocation model, different investors would have to deposit funds into their individual portfolios, right? And grants you access to manage their fund through a guiding document known as the limited power of attorney, LPOA. So each of these investors would have their different trading accounts with a brokerage, right? With a particular broker. They'll fund the accounts differently. It depends on how much they're funding and how much is your minimum investment capital, right? Once they fund their different accounts, what they do is that the limited power of attorney is being issued by the brokerage to protect the investors, and of course you're the fund manager. So what happens is that after funding their individual accounts, the brokerage helps you pull this fund into one pool, right? They help you bring all of this fund into one major pool and gives you the access as a fund manager to trade on that pool fund, right? So what allows you to trade on that pool fund is a limited power of attorney. So with a limited power of attorney, you are given the opportunity to trade. It's called trade only move. However, you are not allowed to make anything that has to do with withdrawals, transfer and deposit. The only thing you can do with this pool fund is to trade and make returns on this pool fund, right? So they deposit their capital into their trading account. The brokerage helps you pull the money into one account, one central account, which is the pool fund, and the fund manager is allowed to take responsibility of trading activities on the pool fund, right? So let's say each of them have $1 million each, right, on their different accounts. That is $5 million. So the brokerage will help you pull this $1 million into one central account, which amounts to $5 million, meaning the fund manager now has $5 million in assets under management to trade with, right? So basically That's the palm structure, all right. But on the map structure, what happens on the map structure is that, now remember I said that the map structure and the palm structure is similar, right? However, there is a slight difference between them, and that is what I'm going to be discussing in this video. So on the map structure, each of these investors would fund their accounts, right? But those funds would not be pulled into one central account. Now, the fund would be maintained in each of their different accounts. However, what happens is that the broker helps you connect. I think, let me use this tool. Give me a sec. What's going on? All right, so on the map structure, they still maintain their different accounts. However, the money would not be pulled into one central account, one pool funds. What happens is that each of them would, give me a second, I need to use this tool. Each of them would have their different accounts. This stuff is too dirty. Give me a sec, let me clean up this so that we have something smooth enough to work with. All right. My handwriting is really terrible on this stuff, but I'll try. All right, so let's say again 2, 3, 4, 5. Now these are the 5 different investors. What happens on the MAM structure, which is a multi-account manager, is that each of these accounts is being held individually on the brokerage account, on the broker by these individuals, right? So it's not going to be pulled like on the MAM structure. What happens is that these accounts, their individual accounts, would be linked to your account. So you, the fund managers, or you would have to also deposit some funds into the brokerage, right? A certain amount of money. It could be $10,000, $100,000, depending on the capacity and also depending on the requirements of the brokerage, right? You would open your account, your individual account, which would serve as a master account in this case, right? M stands for master, right? Your deposit would now serve as a master account. What happens is that this investor's portfolio would be linked to your master account, meaning whatsoever trading activities you take on this account would automatically be mirrored into this investor's account. All right, whatsoever trading activities you take on your account, on this master account which you deposited with the broker, it would be replicated on the account of these investors, right? So in this structure, it's not going to be pulled, it's just going to be maintained on the individual accounts of these investors, allowing you to place trade on the money you deposited with the broker, and that money would be allocated. That same trading activities would be replicated into the investor's account. So that's just a simple structure of the MAM. So in the MAM structure, what happens is that what you're going to be seeing on the master account is that it's the same amount of money you deposited. So if you deposited $20,000, what happens is that you're going to be trading with $20,000. All right. If you deposited $100,000, what happens is that you're also going to be trading with the $100,000. But on the palm structure, it is what is going to be showing on the master account is the pooled funds. All right. So the difference between the master, give me a sec. I need to drop this too. So right. All right. So we have some space. So the difference between the palm, right? Palm, give me a sec. PAM and MAM structure is that MAM structure, you trade on the master account with the exact money you deposited, be it let's say $100,000, let's say 100k, all right, 100k. So if you deposited 100k, what you'll be trading on the master account is this 100k, and whatsoever trading activities you do on this trading account, which is the 100k you funded, would be mirrored into the account of the individual investors, depending on their risk tolerance level, depending on their risk management, what they are comfortable with. So all of those things would be discussed prior to when all of this prior to when you even start allowing them to link the accounts to your account, right? It's something that needs to be discussed. I think in the future videos I'm going to be speaking about how to draft your investors mandate, right? It's something that is important. It's a topic that's really important, and I'm going to try as much as possible to speak on that. So for the PAM structure, remember I said these investors will also fund their accounts in their individual accounts. However, it will be pulled into one central account. So if you have 5 investors and the 5 investors all deposited $1 million into their trading account. So the broker helps you to match the $1 million, making a total of $5 million, and they'll deposit into one central account, which you would be trading on this account. So in this case, you're trading on the $5 million. What is going to be showing on your end, right, on the fund manager's end, is $5 million. However, when it's time for profit split and allocation, the broker would also help, make the profit split to the individual investors and all of that stuff. So this structure is advisable for emerging fund managers when you don't have a lot of money to structure your fund. You don't have a lot of money to even go for looking for license. Now with this structure, you don't need a license to operate this structure because you're operating under the umbrella of the broker, right? The broker, of course, before any broker opens their doors to what's this all right, so before any broker opens their doors to what's going on. All right, so before any broker opens their doors to trading activities, before they can start even accepting customers and all of that stuff, right, they need to be licensed, right? There are several jurisdictions for structuring brokers and getting licenses from, right? So you're operating in this structure, right? In this structure, you're operating under the license of the brokerage, right? Because you are not accepting investment directly into your trading accounts. That's why I tell you, people, don't go about telling people, I know how to trade, I know how to trade. Then you get money from them. And in fact, this money is sent to your bank account, where you are going to use this money to deposit and start making trading activities and go as high as offering monthly returns on investment. You are not licensed to do that. It's illegal in fact, in Nigeria, right? So in Nigeria, there's this new act, right? The Securities Investment and Securities Act of 2025. I think it was released April, right? That stated that the SEC now are the regulators of digital assets and online foreign exchange, right? So in order for you to even start accepting investment directly from investors, you need to be regulated by the SEC, and you may not afford to go through the requirements of SEC, right? Hence why you shouldn't even consider getting money from investors directly. It will save you. You get into trouble when you start getting money from investors and funding your trading accounts. Don't operate that structure, right? At some point you'll be tempted, right? The best structure you can operate without any overhead costs, the best structure you can get started as an emerging fund manager, is to start utilizing the products of retail brokers, like the PALM structure and the MAM structure that I've just indicated here. These are the two structures of which you can get started as emerging fund manager. When you have the money, when you have the client base, when you have the investors base, and when you have the structure, everything to operate a standard hedge fund, you can migrate to any of the structures, right? So I'll speak a bit about the Mauritius Global Business License. So for the Mauritius Global Business License, it is a license issued to fund managers by the Financial Service Commission of So for the Mauritius Global Business License, it's a license issued by the Financial Service Commission of Mauritius, right? I think this license, there is two. I think there's category 1 and there's category 2, right? You have to go through, an attorney would help you decide which of the category you should go for. But then the Mauritius Global Business License is a globally recognized license, right? It can help you. In fact, if you have this license, that is when you can start getting money, investment directly from investors into the fund account, right? And making trading activities. But without licenses like this, you're operating an illegal structure if you get funds directly from investors. If you want to get funds directly from investors and you have the money to get a license, then just go through the routes to acquire the Mauritius Global Business License. Of course, as you get a license, there are your regulators, so you are required to be compliant to the regulators, right? You need to you need to be compliant to the regulators. Of course, you need to do some KYC process. There are a lot of things that you need to consider when you have when you get issued the Mauritius Global Business License. Of course, there is always an ongoing scrutiny, right? As long as you keep holding the license, there's always an ongoing scrutiny to ensure that your practices are in line with whatsoever whatsoever they are looking to achieve, right? So for the Mauritius Global Business License, you can get started and get funds directly from investors. But I don't even like the structure. I don't even like the idea of getting money from investors directly, because you could be tempted, right? You could be tempted. But then if you want to operate the Mauritius Global Business License, I always advise that you have a segregated account. There's something called a segregated account with a liquidity provider. So what happens is that once you acquire this license, you approach liquidity provider. In this case, you're not approaching a retail broker, right? You're approaching a liquidity provider. Now there's several liquidity providers that that offer services to fund managers, to hedge fund managers, to money managers, to a lot of institutional dealers, right? One of them is Finalto Group, right? I don't want to give them a shout out, but then that's one of, I'll not mention their name again. They offer the services to institutional investors, hedge funds, so they can give you liquidity, and they can also help you with the technology to manage your funds. In fact, if you meet them, right, they'll give you something that is similar to the PAM structure. They'll create a software that is similar to the PAM structure, and you get direct access to the market liquidity. So it's a tier 2 liquidity provider. It's not a tier 1 liquidity provider. Tier 1 is the big banks, right? Goldman Sachs and all of that stuff. No, Finalto is not a tier 1 liquidity provider. They're tier 2 liquidity provider. So you just approach them. They'll get on a call with you and get to understand your business and how you operate your business. Then they'll create a structure, a technology for you that allows you to, run your fund management business, right, without any restriction. And of course, the requirement is that you have to be licensed. You can't meet them without being a licensed fund. So they'll have to ensure that you are licensed to run a fund management business. Once that is done, they'll basically give you everything, although there are several other things that you need to consider. There'll be fund administrator and some other things. But if you meet the Finalto Group with all of these things, they are going to basically give you every infrastructure you need to run a fund management business. So maybe in the future, I'm going to make this topic is really broad, right? The LP and the GP structure is really broad, because this is what this structure is, a structure the big guys use, right? All these big hedge funds in the United States, like what's this guy called? All those big hedge funds in the United States that manage assets over 50 billion, 100 billion. This is the structure they use, the GP and LP structure. So I'll do a standalone video on this structure, right? Because this structure is broad, man. This structure is broad, but then this video alone helps you to even get started as emerging fund manager. You can, as emerging fund manager, of course, you fall under the startup phase, where in fact I love the percentage allocation model. The reason why I love the percentage allocation model is that you don't even need to have money to operate this model. You can start this model with $0, right? Because you're not the one bringing the capital. The investors are the one bringing the capital. Once the investors bring in the capital, the broker helps in facilitating the process and making sure that all of those capital is being merged into a pool of funds where you come in to manage, right? So the PAM structure, the investors are the one that bring the money. The broker helps you in terms of profit sharing, in terms of drafting out the contract, the limited power of attorney that protects you, the fund manager and the investor. Personally, I usually have my own documents, my own contract I sign with my investors. So after the limited power of attorney that is being issued by the broker between the investors and me, the fund manager, I also have my company. We also have our contract where we also come to terms with the investor concerning our operations. So the palm structure, you need $0 to get started with the palm structure. However, with the MAM structure would require that you have some deposit with the brokerage, because you would be trading on the accounts you deposited, on the money you deposited, and whatsoever you do on that account is what is being replicated to the investor's account. So guys, I think we've come to the very end of this video. If you need anything that has to do with hedge fund, I have a lot of fantastic topic I'm gonna be discussing in this channel. And if you don't want to miss out, please just subscribe to this YouTube channel, all right, and share this video, right, and like this video. And I cannot wait to see you in my subsequent videos. Take it easy.